Welcome to Global Money Talk, brought to you by Sampro TV. Greetings to all of our viewers from across the United States, Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and joining me today at the New York Stock Exchange is Tai Wong, independent proprietary trader. So happy Monday, happy Veterans to you, Tai. Thanks for joining me.
Yes, it's great to be here. Great to be here. Hope you had a good weekend.
I did, thank you.
So it is Veterans Day. I think that bears talking about a little bit. It is, the bond markets are closed today, but the stock market's open, so we're here. So Veterans Day was originally Armistice Day to celebrate, to remember the American soldiers who died in World War I, and then ultimately after World War II, President Eisenhower made it Veterans Day to celebrate all the veterans who fought in the various wars. And it's really amazing that the youngest World War II veterans who are left now are about 99 years old. And actuarially, we think there may be 40 or 50,000 of them left. We're not sure, but they decline pretty rapidly every year. And even Korea, the youngest Korean veterans are 90 years old, and a conflict that doesn't seem so far away, Vietnam, the youngest veterans are 70 years old. So today it's a good day. We celebrate the approximately 16 million veterans that we have here in the United States. And also for birthdays, interestingly, is General George Patton's birthday. Patton was the charismatic, sort of famous or infamous general, who led some of the most effective American forces during World War II. So happy Veterans Day, all the veterans here in the United States.
And here at the New York Stock Exchange, Tai, before the opening bell, we had a 2-minute moment of silence on the floor as well. So, as you mentioned, bond markets are closed, but U.S. markets are open for stock averages. And what a morning we've had so far. We're seeing the Dow up by about 430 points, extending last week's rally higher by 1% this morning. And we're seeing the NASDAQ higher as well, trying to stay above the flat line this morning. And the S&P 500 higher by 0.3%. And holding above that 6,000 level. I do want to take a look at the Russell as well this morning, because we are seeing that index extend gains. So overall, we're seeing the major averages higher. And of course, very quickly, I do want to take a look at Bitcoin, because I think this is notable. Year to date, we're higher by nearly 90%, believe it or not. It is up by 90% as we saw Bitcoin clear that 84,000 level this morning. So a lot of price action this morning.
Really remarkable for Bitcoin. I think we closed at 78,000 or thereabouts on Friday. A huge rally on Sunday. I was watching this. Oh my word! And it just continued. It's dragged along, a lot of the other coins with it. Ethereum and Solana. Solana is up at 220. I think it's the highest since 2021. So it's really, the coattails are really big. Ethereum is still, has had a little bit of a tough year, but it certainly looks a lot better today than it has in recent times. I think something like Bitcoin is, and I should have brought the chart, but it was in a downtrend for the first, 7 or 8 months of the year, and then back in an uptrend. Now it's moving so rapidly, it's surged above the uptrend. So at some stage, I think the momentum will sort of slow down. But if you're long, it seems like you maybe take a little profit, but you would be you want to keep a core long position. You sure don't want to be net short in a market like this.
Yeah, and I do want to take a step back, since this is Monday and last Tuesday was election day, and fortunately there is no uncertainty in terms of the results. And we've been seeing this rally in stocks and Bitcoin ever since last week. So why don't we take a look at the election results and expectations moving forward?
Yeah, that's a lot to talk about. You're absolutely right. So glad there isn't the recriminations about cheating, about recounts. Although I think we're going to get some recounts, like in Pennsylvania, the race has been called for the Republican Dave McCormick, but Casey has refused to concede. It looks like they may have to recount that. There might be some fighting about that, but that seems to be relatively limited, which is very good after the recriminations we had, the election 4 years ago. But let's take a look and see where we are. So it looks like, even though they're still counting California a week later, about 77% of California is in, it looks like the the GOP will sweep all three houses, all three houses of Congress, or the two houses of Congress and the presidency. Right now, you need 218 seats to have the majority in the House of Representatives, and the Republicans have 213, with 20 races left to call, and they're leading in at least half of those. So seems very, very likely that they'll hold all three houses, just like they did in 2017. We won't know the final numbers for perhaps potentially another week. Some of these races are coming down to hundreds, if not 1,000 votes or something like that. So it'll be very, very tight. And it remains to be seen then what the Republican majority led by President Trump will be able to do with it. One person I do want to talk about, and I don't think anybody really knows her very well, and I think that's sort of intentional. Is if I don't know if you're political junkie like me, but at sort of 2:30 in the morning, when Trump brought his old entourage on, he asked this lady who, this older lady who was in like a gold silver blouse to come and speak, and she was like, I don't want to speak. So that's Susie Wiles, who was his co-campaign manager, co-chair of his campaign, and now recently named the White House Chief of Staff, which the first woman Chief of Staff in the history of the United States. And most people believe the most important role in the administration, because the Chief of Staff directs who has access, what gets prioritized on a day-to-day basis in the White House, and so in government, and in actually most circles, she's just known as Susie because she doesn't need a last name. She's very, very well known. Has been working in politics for Jack Kemp, even before Reagan, and she worked for Reagan. She knows everybody. She helped Ron DeSantis win the governorship, and then the DeSantis people and she had a falling out. And in the end, she went back to work for Trump in the primaries, and a lot of people actually say in Florida, where she's based, and she's really, really well known, that it would be President-elect DeSantis and not President-elect Trump if he had kept her. So in other words, she is very well respected, stays in the deep background, doesn't appear much, certainly on the record, but knows everybody. And I think there is actually some level of comfort in Republican as well as Democratic circles that you have somebody who is really well known, who has great contacts, who knows how to craft a message in that chair, where somebody might have to say, Mr. President, this is probably not a good idea, and because she led his campaign, really, he's going to listen to her. So Susie Wiles, going to be a really important player, and by most accounts, a very, very good choice for White House Chief of Staff. Another person that we want to keep an eye on, we don't know where he's going to land, is Robert Lighthizer. Robert Lighthizer was the U.S. Trade Representative. He was one of the triumvirate of really anti-China hawks, with Peter Navarro, who ended up going to jail for not testifying to Congress, and then Wilbur Ross, who I think at 86 years old is going to take a pass in terms of serving again in the administration, as he was Commerce Secretary. But where does Lighthizer land? The chatter is that he might be asked to be U.S. Trade Representative again. And he is, an anti-China trade hawk. He will be very, very tough in terms of trade if that's where we are. So it'll be interesting to see where he lands. We're not sure. And then the next for us, in finance, will be really important is who's going to be the next Treasury Secretary. And my view has always been that the markets around the world have gotten so complex that you really need a markets person. You can no longer have a sort of captain of industry do it, somebody who even tangentially attached to markets is probably not good enough, because you can see markets move dramatically, crises escalate, so you really need somebody. So the four people who have been named most prominently are Howard Lutnick, chair of Cantor, who raised a lot of money for Trump. Trump really likes that. Bill Hagerty, who was a former consultant, senator from Tennessee. Scott Bessent, who is a really interesting, raised a lot of money for Trump, actually worked for Al Gore, raised money for Al Gore back in 2000. He is really a hedge fund sort of master of the universe. Worked for Soros for a number of times, for quite a bit of time. One of the guys responsible for the famous sterling trade that really put Soros on the map. Interestingly, he has two children and he is gay. A lot of people like him a lot for Treasury Secretary. That's certainly a guy who knows the ins and outs of exactly how markets work. And interestingly enough, Trump is in some ways a very interesting character, but he likes sort of good-looking people. I mean, we laugh, right? But he likes good-looking people. It's common sense. Smart, successful, good-looking guy, and if anything, that might give him the inside track. And I think he would be a very, very solid choice. And the last person that's mentioned is John Paulson, who made his money really made his money in the financial crisis, betting against mortgages. Is a gold bull. He's raised a lot of money for Trump, so he's also in the mix. But looks like unless it's a big surprise, these guys are going to be all pretty solid. I'd probably like Besant and then Besant first, Paulson and Lutnick probably just up below them, and maybe Haggerty because real smart guy, but maybe not as close to financial markets as ideally would like in a Secretary of the Treasury.
And Tai, I'm glad you gave us this overview of people we need to keep our eyes on as we head into the end of this year and, of course, 2025, because there's been a lot of speculation about what will happen to the Federal Reserve in terms of leadership as well as the SEC. So I think this is a really good time to talk about the election results and what to expect as we await the new administration.
So, I think they're talking about it very, very aggressively now. The SEC, I think Gary Gensler, I'm sure probably already has his bags packed. There's probably no one less popular in the financial markets than Gary Gensler after his stints at the CFTC and now at the SEC. It's sort of, and the crypto industry particularly didn't like it because it was sort of enforcement by regulation by punishment. We'll fine you, and the business would rather say, give us some ideas of what we need to do and what we can do and what we can't do, but just don't keep fining us for stuff. So I think one reason why crypto, especially Bitcoin, has rallied so aggressively is it's looking at a Trump-run SEC, CFTC, the different regulatory agencies is going to be a lot more lenient and sort of do whatever you want, just don't let it get out of hand kind of idea. That in terms of the financial markets, I think there's going to be maybe a fair amount of house cleaning in terms of potentially the military. I think there are some folks in the military that Trump doesn't particularly like. I think Christopher Wray, as head of the FBI, he had some sort of run-ins with the Congress as well. I think he is probably likely to be replaced, highly likely to be replaced, in my view. And we saw just early this morning that Elise Stefanik, a very senior member of the House, is now going to be ambassador to the United Nations. So there's going to be a lot of fireworks with Elise Stefanik, who really built her brand by hammering the Ivy League presidents when they were testifying, about the protests in the fall last year. So I think that news is going to continue to come out. I'm sure later in the week, in our next conversation, we'll have more things to talk about. But it's going to be news, sort of a steady drip feed of news, during the course of the week. One other thing that's notable is they've announced that Mike Pompeo and Nikki Haley will not be part of the administration. And I think that one thing that's important is I think it makes having either one. I don't think Nikki Haley, because she ran against him, would have been in anyway. But Pompeo at one point sort of came out against Trump, and the sort of the more isolationist wing of the people who have the president-elect's ear didn't want Pompeo because they saw Pompeo as a hawk. That doesn't make our allies very comfortable. I think Europe and Asia certainly wouldn't have minded someone like Pompeo. It is unclear who now will be Secretary of Defense. It could be actually Bill Haggerty that we just spoke about. But I think that's the one that the allies want. Somebody who sort of somebody who's I guess reliable and has a strong worldview and believes that Russia and China and North Korea and Iran are sort of like an axis that we have to fight. So, more that news should be coming out. I think within the next couple of weeks.
And we know that when we're talking about all these topics here, it's going to have implications on the broader market. So whether we're talking about stocks, bonds, or any other asset class, that whoever ends up taking these key roles, it's going to affect diplomacy, geopolitics, taxes, tariffs, and what happens in terms of different sectors of the market as well. So in terms of M&A as well as IPO action, so that is something that we'll have to keep our eyes on. And I think this is a great time to look at some of the assets that haven't been performing so well, including gold. So let's take a look at that. And Tai, as you mentioned at the top of the show, bonds are closed. The bond market here in the U.S. is closed today, so something to keep in mind.
Yeah, and bonds, they sold off aggressively, the night of the election and the day after, but they've actually all come back, and now we're waiting to see what actually, what policies they actually enact. But the bonds have been relatively well behaved. But as you mentioned, let's take a look at gold. We can get the gold chart. So this is the year-to-date chart in gold, and I thought gold would rally on a Trump election simply because the deficits were going to be high. The deficits were likely to be higher, which most people seem to agree on, and there's going to be more inflation. Particularly with the imposition of if the tariffs are big, I thought gold would go up. But it turns out that the gold market may have already priced that in. But the gold is down sharply today, and I think down probably 5 or 6% since the election, and that chart's not looking really healthy. Trading right at 26.20 right now, near the lows of the day. If we look at, there's some support technically just under 2,600. If we break through 2,600, we're not going to get real support until just below 2,300. Now, even at 2,300. Gold will have been up 15% or so for the year, which is still a great result, but it'll certainly take the tarnish of what's been an amazing year. So we get through 2,600, you really don't get into support till under 2,300, where it tested there 3 times in the middle of the year and subsequently bounced. I still think gold is in the bull market. I really still don't think that. If you like gold before the election, there's no reason for you to like it less. The dollar is higher, but in terms of uncertainty, in terms of longer-term concerns about deficits and inflation, if you wanted to own it on November 4th, you want to own it today. So I think it will bounce, but the chart's not looking healthy, and certainly it strikes silver down along with it. The other precious metals, platinum, palladium, have had a big drawdown, but seems to have stabilized, at least certainly today.
Yeah, and Tai, you bring up an important point there, because despite the lower trading for gold year to date, it is up by nearly 27%, and we have come a long way since the beginning of this year. So I think it was great to see that year to date 1-year chart as well.
One thing to actually mention also is Barrick had reported earnings, and like some of a couple of the other miners, they weren't as good as the market had hoped.
Yeah.
And certainly it goes to show again that mining is a really, really tough business. Costs come up very, very quickly, with inflation, with having to pay your workers more, the cost of energy, though the cost of energy has dropped, recently. It's a tough business. So sometimes maybe the commodity is still a little bit better, but Barrick used to be the biggest gold miner, and it's lost that to one of its major competitors.
Yeah, and we know that mining is not for the faint of heart, for sure, because you mentioned some of the challenges there. But we've talked about gold on the show before, Tai, and you've mentioned some of the correlations and the relationship it has with key economic indicators, as well as central bank buying here. And as we head into year-end, it is the holiday season, and we traditionally see gold buying from certain countries. So do you want to give us an overview of what's happening right now when it comes to the broader gold market?
So the central bank buy, we haven't seen China dip its fingers into buying for several months. The last time they bought was under 2,300. It wouldn't surprise me to see them again if we were to correct down to sort of perhaps what they view as better value,
Yeah.
and for them this is long-term accumulation. So I think the view is, you could have the most bearish market, and then China comes in and everybody turns it back around again. Um, in terms of in terms of retail buying, it's really more China and India than it is in the U.S. I mean,
Yeah.
we like gold. We talk about it, but selling at Costco, and it's
Costco, yes.
been pretty successful. And certainly that might actually bring up. I mean, how many Americans actually shop at Costco?
Sure.
I don't know, but I mean, it's got to be like 15-20%, right? Seeing gold bars or seeing the stand there certainly makes people think a little bit. But really, it's sort of the holiday times in China, which would be around the New Year, which I think this year it's usually towards end of January, beginning of February. I haven't checked what it'll be in 2025, and then the different holidays in India. We've just had Diwali, so I think we probably had buying ahead of that, which may have contributed to some of the run up. But India and China are really the biggest retail buyers. It's really important what they do, and for them it's a store of value. They don't, the Indian families, their value is in all the gold jewelry that all the women in the families have. It's not necessarily, in stocks and stocks and bonds or in the bank account. Gold has really historically been, what is the store of value, and that's not going to change.
Well, speaking of central banks, Tai, and gold, let's take a step back and look at the Fed meeting last week. So this is the first time that we're talking since we got that Fed decision, 25 basis point cut as expected. And of course, all eyes are on this week's economic data as we head into next month, December. So what did you make of how Powell handled the press conference?
Well, his best answer really was the one-word answer. Somebody said, so if the president-elect were to ask you to resign, would you resign? He said, no.
No.
and that was the soundbite. I mean, as far as Fed meetings go, and we've had so many this year that have been really consequential, and people looking. This one was a little bit of a snoozer. Really, we knew they were going to cut 25 basis points because there was no Nick Timiraeus article ahead of the meeting. Not this time. And sort of the statement didn't change very much. It was really a continuation of what we saw in September. And the view is that they were going to do 25. The likelihood they'll do another 25 in December. Actually, I should say I should take that back. The best answer was the no answer, but his other answer was certainly 16 ways of how we're going to ask Powell if he's going to do anything regarding politics, and how many ways is he going to parry those.
Yeah.
Right? Did a great job. And they said, well, are you going to proactively do things ahead of time? He goes, we're not. Once we have an idea of what they're going to do, we have becomes a real possibility. The staff will start to model that, and then we'll figure out the different scenarios that could occur. But functionally, we're not going to anticipate what a new administration is going to do or be able to do this far ahead of time, which I think suggests that it's going to be steady as she goes. For December, another 25 basis points, and then they really will have to see. And then we'll also see the dot plot, the summary of economic projections, to see how much the governors and the regional Fed presidents have changed their view. One thing I would say is, from a month ago, for the end of 2025, there's maybe about 50 basis points of fewer cuts than there was a month ago. So the end of 2025, I think we're somewhere in the range of maybe 75 basis points of total cuts, whereas we're close to 125 a month ago. So the 25 this year in December, and a full 100 in 2025. Now we're looking at maybe another 50 in 2025. But we're really getting a little ahead of ourselves, but that's what the market is thinking of what the Fed is going to be able to do next year. The other thing we also get is you get the big blackout period ahead of practically, I think about 10 days ahead of the Fed meeting. We'll get a whole treasure trove of Fed speakers. It'll give us an idea of how the last month or so has changed their outlook, and certainly they may mention the election and what they're thinking. I don't think they're going to get way out over their skis, but we'll get an idea starting this week of what what these folks are thinking, and we have another 36 days or so until the final Fed meeting of the year.
And speaking up, in terms of the major economic data releases that will be coming out, giving us a better indication of how the U.S. economy is doing, we get the employment report, and this week we get CPI as well as jobless claims, PPI, and retail sales figures. So that's going to be key, especially as we head into the rest of the year, as well as holiday shopping season. So what are you looking for from this week's data points, Tai?
So I think claims have been impressively low over the past few weeks since the hurricane disruption. It wouldn't surprise me if it bounced back up a little bit, but right now the Fed is sort of set in what they're going to do for the next meeting. I think it's going to have a little less impact than we have previously. CPI certainly, if it surprises the upside, we'll get the market. We'll probably push the bond market into another sort of wall of worry a little bit. You'd expect the curve to steepen. With the back end gets the yield go up substantially more than the front. Retail sales. I mean, we're still looking at we'll be looking at very, very early Christmas shopping. I don't think they're going to take too much into it. So in terms of this is a little bit of a quiet period for data. Sometimes like data was so important for next meeting, you'd see big jumps. I think it's going to be a little bit less. What I think is worth thinking about is if you get, the Fed has a famous dual mandate, right? But what happens if you end up with sort of the worst case scenario where the tariffs and other things do, and you get a little stagflation type problem next year where unemployment starts to grind higher, but inflation is also grinding higher. What does the Fed do? Does the Fed try to prioritize or try to hold fast? Which one would they? Do they dare cut rates in face of higher inflation? I think that's the worst case scenario. I think they probably gamed it out at the Fed. I don't think they want to talk about it because some things are probably better left. You're thinking about it, rather than talking about it. Oh, be a good question to ask.
Yes. Definitely, Tai. And I think before we round up today's discussion, let's look overseas to China, because since you and I last spoke, China has announced a stimulus package. So what do you think went on at that meeting, especially on the heels of election night here in the U.S.?
So I think they took their cue from the Fed. You know what? We're just going to wait and see. We're not going to conjecture. Maybe we can cut a deal with Donald Trump. And certainly the man's so transactional. What can we give him to forestall the 60% tariffs that he's threatened on China? So it was really a wait and see sort of reaction. They did come out with something that disappointed the market. So the Chinese stock benchmark stocks sold off. Had a new high of this little mini move, but then sold off the close and then was more or less unchanged during the course of the day today. But they said, okay, so we're going to give a 10 trillion yuan package to help the local provinces take care of some of their debt, some of their hidden debt. 10 trillion yuan, they're going to use 6 trillion of that over the next 3 years or so, and then out to 2028, there might be another 4 trillion that they could tap. So that's just over a trillion, a little over a trillion US, 10 trillion yuan spread over a whole bunch of years. I mean, it'll help, but it really just doesn't do very much. So I think there's certainly disappointment in it. The markets didn't aggressively sell off because they figured that if they still want the 5% growth this year, if the markets really sell off, then they will actually maybe do more. And also the market's pretty long; they don't really want to aggressively sell against essentially their own longs. But it's certainly a disappointment, and you feel like the decision makers in the government, that standing committee, is a wait and see. We'll do what we need to, but they're moving cautiously, which has been sort of their modus operandi all year. looks like they don't want to change that, and that's one indicator as we saw is copper is down sharply, down
Yeah.
below $9,400 a ton. It's been pretty resilient down around 9,000. I don't expect a huge move lower, but certainly that's the first disappointment where you really didn't give the market anything it needed. You helped the provinces, but you really didn't do any stimulation, fiscal stimulation that people really feel that they need to do to get the consumer section of that economy going again.
Yeah, you wonder if these officials and decision makers, whether or not they have read The Art of the Deal. I know I might have a paperback copy lying somewhere at home, but it makes you wonder if they've read that book by Trump.
Certainly, if it's TLDR, I mean, have somebody read it and give you a summary, or you could just use the AI. I think somebody told me about
that
this.
is true.
Google, what is it called? It's called something. I forget the name. Letter something notebook
Oh, yes,
LM. Is
yes,
it notebook
yeah.
LM? And it said you could feed it something and have to give me the TLDR, the summary of of the whole book. Just go ahead and do that and understand the man. But I certainly think you'd have to think they've done that profiling and seen where he is really he likes the deal.
Well, I think that would be a good way to test out that platform. So, Tai, thank you so much for joining me today. And as always, I look forward to speaking with you after we get all of the key economic data out this week.
Great to be here.
Thank you so much, Tai. And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sempro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you for joining us. We'll be back here tomorrow. Have a great day.